Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It is 11:50 on Thursday, the 26th of June 2025, and the market is open. It is 10 days, I think, since the last live broadcast, and that's literally due to when I can fit this in. So far we have completed 3 years and 12 weeks, I believe, of what will be roughly an 8-year FIRE experiment, FIRE journey, whatever you want to call it. I think it's worth mentioning that last weekend the United States was engaged in strikes against the nuclear capability of Iran, or at least that's how it was presented to the world. I fully expected to see the market react negatively. I expected to see a bit of a dip come Monday morning, but in fact it doesn't appear as though that has really had any effect at all on the market. So interesting, and perhaps it serves to prove that you cannot always be sure how the market is going to react, if it's going to react to events, whether local, national, or even international. I suppose hypothetically you could maybe have predicted that the market could actually rise if the strikes were seen as creating a more stable international situation. So it's there's various ways that you could have interpreted that piece of news, but from what I've seen, it doesn't appear as if it was particularly influential at all on the market. I've not seen any significant moves in either direction, to be completely frank. I was just looking at the sort of the long view of the market, as you can see on screen here, while I was waiting for the introduction to complete, and a couple of things occurred to me. So just to point out the red circles, first of all, those I have mentioned before, and basically the one on the left at the lower part of the screen represents what I call the COVID effect. So you had the significant drop in value, followed by the so-called V-shaped recovery. Then a little bit further up, you can see that there was what I call a period of instability, or fairly significant volatility, which I believe was in response to the Ukraine conflict. So you have a series of dips followed by rises and so on. But what occurred to me was that if you actually look at what I'm going to call the amplitude of those, whereas the first couple appear pretty significant, after that it's as though the amplitude, as I say, appears to decrease before finally regaining the market's trajectory again. Then we had a significant period of growth, which I believe was basically putting back, correcting in a sense where the market probably ought to really be. And then at the top right there, the second red circle highlights what I believe is the effect of Donald Trump's tariffs announcements. So you had again a fairly significant dip, followed soon after by what essentially looks like another V-shaped recovery. So looking at the state of things as things stand, let me get rid of that. The current market value is sitting at 84.33. That's down almost 0.5% today. It was 0.5% a short time ago. The current portfolio value sitting at 23,900. The return on investment roughly 18.75%. We have 283 shares in the portfolio, and the average purchase price as things stand 71.03. Before we have a look at the notifications, let me just draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, so as mentioned at the bottom of the screen, there is an affiliate link in the video description for Monzo. There's also one for Smarty Mobile, both companies that I personally use. I like their interfaces. I find them very easy to manage, and as regards Monzo, very responsive in terms of transaction times. Even internationally and during weekends and bank holidays. And I also use the Monzo for Kids ability as well to hold an account for one of my kids, and it allows me just to keep an eye on the activity that's happening there. And there are other options as well. If you need to, you can set daily spend limits and that sort of thing. Coming back to the market, let's have a look at the notifications. So, biggest stocks before earnings: Micron Technology, Hive Digital Technologies, Walgreens Boots Alliance, McCormick & Co., Jefferies Financial Group. BP soars 3.5% on Shell's $80 billion acquisition proposal. So two giants of the petrochemicals industry there. It'll be interesting to see if there's any regulatory concerns or intervention as regards that. Tesla down 4.5% as robotaxi buzz fades and European sales plummet. Not sure what the reason for that is. Coinbase, another trading platform, up 4% as regulatory tailwinds continue with EU MICA approval. I'm not sure what that means. QuantumScape, I think that is, jumps 33% after announcing Cobra separator, boosting electric vehicle battery scale-up. Biggest stocks before earnings again: BlackBerry, AeroVironment, Paychex, General Mills, Nova Gold Resources. I don't think I recognise, well, I recognise BlackBerry, assuming that is the company behind the phones from yesteryear with the full screen keyboard. I personally had a cheaper Nokia alternative, which did the job probably just as well. Upcoming holidays: Thursday the 19th of June, so that has passed now, but that was an official holiday in the US. The market was closed for trading at that time. Okay, and that brings us back then, as you can see, 10 days ago to our last investment. The price that we paid at that time was $83.93. And that concludes the notifications. So yeah, although the market is down today, it's actually slightly higher than it was at that time. Guys, let's go ahead with this week's investment. If you follow the channel, you will know by now that each week I invest 120 theoretical pounds in the Vanguard S&P 500 exchange traded fund. It is shown here on Trading 212's practice platform. It's probably a good way to start if you are considering investing but haven't yet made a firm decision. It would allow you to do some practice trades without actually engaging real money, and just get a feel for the platform in general. It exists as a mobile platform as well as the PC interface that I'm using here. So £120 at the current market value should buy us roughly 1.42 shares. I am going to review the purchase order. So it's a market buy. We are buying on the open market. I'm not putting in any stop values or anything like that, and execution should happen at whatever the current fair market value is. Let's send it through and see what we get. So we got 1.42 shares as predicted for a purchase price of 84.37. That brings the portfolio value to just over 24,000. Return on investment little changed, 18.6%, and the new average purchase price 71.10, you might as well say. Let's just actually have a read at this AI analysis of the S&P 500. So this is provided through Trading 212. The little note at the top that I'm sure you can probably not make out says currently available only for selected stocks. The data is generated by an AI automated tool. It does not reflect human opinions and should not be considered professional advice. AI analysis is experimental and Trading 212 does not guarantee its accuracy. Not investment, legal or tax advice. Do your own research or consult a qualified advisor. So there's a little bit here about market trends. It says the Vanguard S&P 500 exchange traded fund has experienced a gradual upward movement over the past month, with prices increasing by a few percent from recent lows. Technical indicators show the fund is currently in a strong position with buying momentum and price levels near the upper range of recent trading bands. Short-term signals suggest the fund is slightly overbought, but the overall trend remains positive, with only minor pullbacks observed. Excuse me. Fundamentals: the fund has shown a steady annualized return over the past year, indicating consistent performance for investors. It maintains a moderate dividend yield and a relatively low risk profile compared to the broader market. In conclusion, overall, the Vanguard S&P 500 exchange traded fund demonstrates stable growth with limited volatility, making it a reliable choice for long-term investors. The combination of positive technical momentum and solid fundamentals suggests continued resilience in the near term. So there you go. Basically, there's nothing to worry about from that analysis. I think just as I was reading that, there's a couple of points that came to mind. Let me just have a quick scan through again. So whilst this talks about prices increasing by a few percent from recent lows, it doesn't actually point out the fact that there had been a significant drop, and that appears to have been predicated by Donald Trump's tariffs announcements. I don't know what they mean whenever they say, well, I understand when they say that the fund is slightly overbought, but I'd be interested to know what that judgment is based on. And the other thing that I noticed is that the longest time frame that appears to be referenced here is in terms of the past year, which honestly is that's a pretty short-term view. It's really probably too short-term, in my opinion, to to base much on. There was something else I had in mind. It talks about a relatively low risk profile compared to the broader market. Well, that should be the case. Ultimately, the Vanguard S&P 500 looks at the 500 best performing companies in the index, and from that point of view, it is very well diversified. Although the companies listed in the S&P 500 are pretty much by definition American companies, many of them have international offices or international subsidiaries, and from that point of view, you can make the case that there is reasonable international exposure, as well as local US exposure too. So guys, there we go. That is pretty much it for today. If you enjoy watching the discussion and the journey, why not subscribe to the channel? I broadcast weekly, and each and every week we put in £120 into the portfolio, and we see what happens over time. So we're not quite halfway through the FIRE journey as a whole, but we are kind of getting there, and I think so far it appears to be going relatively well. If you particularly enjoyed this episode, why not give it a thumbs up, and if you have any comments or questions, feel free to add them in the box below. Thank you for watching, and enjoy the rest of your week, and have a good weekend. I'll be back next week with more. Bye for now.